What are hedge funds? Monkey has bananas. Monkey wants more bananas. Monkey could plant more banana trees. Too slow. Monkey could hide bananas under rock. Too boring. Monkey could put bananas in monkey bank. Too safe. Or monkey could give bananas to very smart monkey. Smart monkey promises to grow banana pile faster than monkey ever could. Much faster. Smart monkey has strategies. Smart monkey has connections. Smart monkey has very expensive suit. This is a hedge fund. A hedge fund is a pool of bananas. Many monkeys put bananas together. One manager monkey controls the pile. Manager monkey tries to grow it. By any means necessary. How do hedge funds work? Normal monkey saves bananas in monkey bank. Monkey bank gives slightly more bananas over time. Safe. Predictable. Boring. Hedge fund monkey does not do this. Hedge fund monkey bets bananas on everything. Stocks. Bonds. Currencies. Real estate. Bananas from other monkey countries. Even the weather. Hedge fund monkey bets things go up. Hedge fund monkey bets things go down. Hedge fund monkey bets both directions at the same time. This is called hedging, covering multiple outcomes so monkey always wins something. In theory, who can join a hedge fund? Not any monkey. Monkey bank is for all monkeys. Hedge fund is not. To join hedge fund monkey must already be rich. Very rich. In the US, monkey must have at least 1 million leaves saved, or earn at least 200,000 leaves per year. This monkey is called a credited investor. Fancy words. Means rich monkey. Poor monkey not allowed. Why only rich monkey? Because hedge funds are risky. Monkey government decided poor monkey cannot afford to lose that many bananas. Rich monkey can absorb losses. Rich monkey will be okay. Usually. Not always. But usually. Hedge fund strategies. Hedge fund monkeys have many ways to grow banana pile. Long and short. Monkey buys banana stock expected to go up. At same time, monkey borrows banana stock expected to go down and sells it immediately. If monkey right on both, monkey wins twice. If monkey wrong on both, monkey loses twice. High risk. High reward. Global macro. Monkey studies entire world economy. Which monkey country is struggling? Which currency about to collapse? Which government about to make very bad decision? Monkey places enormous bets based on these predictions. One famous monkey bet against British pound in 1992. Made 1 billion leaves in one day. Bank of England not happy. Arbitrage. Monkey notices same banana selling at different price in 2 different places. Buy cheap here. Sell expensive there. Pocket the difference. Sounds easy. Not easy. Happens in milliseconds now. Computers do this. Monkey just observes. Event-driven. Big thing happens. Company merges. CEO arrested. Major lawsuit. Product recall. Hedge fund monkey bets on what happens to stock price after event. Monkey very opportunistic. Monkey not sentimental. The 2 and 20 rule. Smart monkey does not manage bananas for free. Smart monkey charges fees. Very big fees. This is called 2 and 20. Every year hedge fund manager takes 2% of total banana pile just for managing it. Bananas grow or not. Manager still takes 2%. Then manager takes 20% of all profits. Fund makes 100 extra bananas. Manager takes 20. Investor monkey keeps 80. Manager monkey becomes very, very rich. This is controversial. Critics say manager gets rewarded even when fund performs badly. Monkey banana pile shrinks. Manager still takes 2%. Monkey not happy. But monkey agreed to terms so. When hedge funds go wrong. Hedge funds can fail. Catastrophically. Hedge fund monkey often uses leverage. Borrowing extra bananas to make bigger bets. Leverage multiplies gains. Leverage also multiplies losses. Monkey bets 10 bananas, but borrows 90 more to bet 100 total. Bet goes wrong. Monkey loses 100, but only had 10. Now monkey owes 90 bananas monkey does not have. Monkey in very serious trouble. Lenders in trouble. Markets in trouble. When very large hedge fund fails, it does not stay contained. Because hedge funds are deeply connected to banks, to other funds, to markets everywhere. One failure becomes many failures. Domino of very sad monkeys. Famous hedge fund disasters. Long-term capital management. 1998. Staffed by Nobel Prize winning monkeys. Rocket scientist monkeys. Ivy League monkeys. Built fund using complex mathematical models. Fund performed brilliantly. Everyone gave them more bananas. Then Russia defaulted on loans. Markets moved in ways models did not predict. Fund lost 4.6 billion leaves in under 4 months. U.S. Federal Reserve had to organize emergency rescue. Even the smartest monkey can get it catastrophically wrong. GameStop. 2021. Large hedge funds bet heavily that GameStop stock would fall. Small retail monkeys on internet discovered this. Decided to fight back. Bought GameStop stock together in massive coordinated wave. Price exploded. Hedge funds lost billions. Small monkeys celebrated. Some got rich. Some held too long and also lost money. But for one brief moment, the little monkey beat the big monkey. Internet very pleased with itself. Should monkey invest in a hedge fund? Probably not. Most monkeys cannot qualify anyway. But even if monkey has enough bananas, hedge funds frequently do not beat simple low-cost index fund over long term. Manager still takes enormous fees regardless of performance. Fees eat into returns significantly. Monkey pays a lot for something that often underperforms, much cheaper boring option. Some hedge funds produce exceptional returns, but identifying those in advance is extremely difficult. Past performance does not guarantee future bananas. What monkey should know? Hedge funds are not evil, not magic. They are very large banana pools managed by very confident monkeys making very complex bets. Sometimes it works extraordinarily well. Sometimes it collapses spectacularly. Most of the time it performs somewhere in the middle while charging monkey enormous fees to do so. Rich monkey has always had access to financial tools regular monkey does not. That is how the jungle works. Regular monkey best advantage is consistency. Time and market. Low fees. Boring index fund. Not exciting. Monkey will not become billionaire tomorrow. But banana pile grows. Reliably. Over time. Sometimes boring beats clever. See long-term capital management. 1998. Nobel Prize winning monkeys. For months. For 0.6 billion leaves. Gone. Please subscribe.